My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, have you ever been turned down by the bank? Have you ever just wished you could get some less hassle financing? Well, if you've ever had those thoughts or those concerns, listen in, because today, zooming in from beautiful West Palm Beach, Florida, Patrick Pychynski can help us do exactly that, because Patrick and his company, Stacking Capital, they help entrepreneurs get business financing, and we as real estate entrepreneurs count for that as well. So Patrick, welcome to the show. Great to have you.
Thank you, Dave. Thank you. Before I start, I just wanted to take a second to acknowledge you and the fact that you bring real actionable strategies to your audience. So for everyone listening, if you haven't already, please make sure to subscribe and leave Dave a 5-star review.
Man, you asked way better than I do. So thanks for that, Patrick. Appreciate the plug there, buddy. So first of all, tell me a little bit about what it is that you do, big, broad strokes, 30,000 foot perspective, and then let's dial it in for real estate investors.
Beautiful. Yep. So, Dave, you know how real estate investors always say, I'd do more deals if I had more capital?
Yeah.
Well, the real problem doesn't tend to be like the lack of money. It's just knowing how to access it the right way. So too many investors, what I'll see them do in the real estate space is they'll max out their personal credit lines before even touching business funding. So unknowingly, they're cutting off their most powerful source of capital, which is their personal credit. And when that happens,
so big picture overview, you help businesses get business funding. That's your business, correct?
Yes. Mm-hmm.
Okay, perfect. And now we're going to dial it into real estate businesses, real estate investors operating as businesses. So one question might come to people's mind: do I have to be incorporated? Do I have to have a company set up? Or is this something that I can do as a sole proprietor?
Great question. So what I'll do is I'll pretty much give you a high-level overview of what we do in 3 simple steps.
Sure.
So the first thing we always want to start with is a strong personal credit score. So what that means is we're typically looking at 680 plus. And again, these are like the minimum requirements to get you started. Anything 800 plus is going to put you at the prime rates and higher approval amounts, right? But we're mainly looking to optimize the credit. What does that mean? Well, again, aside from the credit, we want to make sure we don't have any derogatories on there. We want to make sure that our revolving accounts, aka credit cards, don't have too high utilization. So oftentimes real estate investors will literally either get a HELOC, personal loans, credit cards, throw everything at their real estate project, and in the process sort of wreck their credit. So credit optimization,
they're maxed out on everything. They get behind on payments. That all shows up. Is that what you're seeing?
100%. And now we can't leverage that personal credit to get business funding on the business side that does not report on the personal credit.
Okay, well, if it doesn't report on the personal credit, why does our personal credit have so much weight in the process?
That's a great question. I'm glad you asked, because there's actually a lot of noise out there in the industry that have people thinking they can access, with just an LLC and an EIN number, unlimited amounts of funding without having to personally guarantee it. So I tell people, unless you're like Elon Musk or Jeff Bezos, where you have an established company that has its own assets and doesn't need a personal guarantee, most of the time you're going to have to leverage your personal income for any sort of business credit consideration. And now in 2025, we're looking at more of a weighted score. So it's not really even just your personal credit score, but it's your personal and business credit scores combined.
Okay, very good. So first thing is credit optimization for yourself and your business. So what does that actually mean? What do you counsel your clients to do to get that cleaned up if it's nowhere near 800?
Yeah, great question. And it's funny because a lot of our clients will actually achieve the 800 credit score, never having been there, right? And it's usually a few little things that we can do, and it comes down to the resources too. Some people tend to have a high utilization on their credit card because they just don't know when to pay down that card, right? So you have something on your credit card, for example, that's called a due date and a closing statement date. So your due date's when that bill is due, and that determines the interest you'll pay on it. But the closing statement date is when it will actually report the balance to the bureaus. So if you're aware of that and you have the resources, the income, and everything to keep those balances low, we typically employ the best possible outcome in terms of you trying to optimize the most would be what we call ASIO, which is all zero except one. So keeping one revolving line with a balance in the single digit numbers under 10% and the rest at zero.
Wow.
So that's just one of them, right? The next would be inquiries. If they have too many inquiries, we can seek to remove those, the ones that are not attached to any open accounts on the personal side. So it's really cleaning it up.
So yeah, well, that's cool. So basically, what I understood you to say, Patrick, please correct me if I'm wrong, is let's say you've got 5 credit cards and, anywhere 10 to 50 grand or 100 grand, credit on those cards. Keep 4 of them at zero, right? So by the time the statement due is date, and maximum one of them, let's say it's a $50,000 credit card, have no more than $5,000 balance on that card, and the other ones keep them at zero, and that will fast track you to getting towards that 800 credit score. Is that what I understood?
100%. Yeah. And again, you don't need that to get approved for business financing, but if you're looking to get the most out of your score, that's one of the biggest things. So the utilization accounts for 30% of your score.
Cool. All right. You said inquiries as well. That's people that shows up on your credit score. So if you're having a lot of people checking your credit for different loan products, that's going to be a negative as well, correct?
Yeah, and something that's a little bit more harmful than the inquiries themselves are new accounts, because the inquiries ultimately can be removed, but the new accounts can. And that's one of the harmful things, again, that we can't, once it's done, we can't necessarily, we don't have a tool to help you with that other than time and focusing on the other data points that these banks look at.
So new accounts, you mean opening up a new credit card, opening up a new line of credit, whether you use it or not.
Exactly. You typically want to avoid opening more than like 3 or 4 accounts in the years, like in the last 12 months.
Okay, very good. Good, solid data there. So next one I'm looking at the information you sent me ahead of time was capital stacking. What does that mean?
Yeah. So basically, we're a little bit different than all the other credit card stacking companies out there. We realize that, the 0% is not a permanent thing. It's an intro period, typically ranging anywhere between 9 to 18 months. So we don't want to just leave you hanging dry, because what we do see happen is a lot of people come over from other funding companies. Their interest rate is running out. They have large balances on the cards, and they have absolutely no plan or strategy to get more capital, either do a 0% balance transfer strategy or any of that in place. So that's where we're a little bit different. We've got about 20 different lending options that are available to most anybody that typically has an 800 credit score. Some of them will also require like a business with business revenue. But regardless, 0% interest business credit cards is one of our main things that we seek to get you, because we can do that without having to be 2 years in business, show extensive paperwork, tax returns, or anything like that. It's mostly a stated income program.
Okay, so let me back up and ask a dumb question. What exactly does capital stacking mean?
Mm-hmm. So again, it means basically getting you access to any available capital at your disposal by mainly leveraging your personal credit score. So we seek to get entrepreneurs and investors anywhere between $50,000 to $500,000. And this would include, again, business financing products starting at interest rates as low as 0%.
So credit cards primarily, is that what I'm hearing?
Business credit cards primarily. And then again, if for more established businesses, we're looking at also business lines of credit and also term loans. These are usually shorter terms. And like I said, ultimately, what we want to do is get you that immediate injection of capital, and then afterwards set you up for what we call it to become bankable and compliant. So that way, I don't know if you know this, but most business owners, when they go apply directly with the banks, I think the number is more than 90% of them are denied. And
Wow.
it could be for little things that are basically what we call like non-compliance items. So a bank has to pay Experian money before they pull your credit report. So they have, we have the software, so I can't imagine what the banks have, but the banks have software that could check to see if a company is bankable, lendable, before even pulling that credit report and paying Experian. And there could be little misnomers like the name of your business is high risk or not having a commercial business address that would lead to an automatic denial. And the reason because of that is because when you go to a bank, all they're really doing is selling your paper to another financial industry down the road. They're packaging it up. But if your business is not compliant, then it's not sellable.
Okay. So that's part of the whole capital stacking type thing, is making sure that you're set up so that you can be bankable down the road. Okay. Very good. And then the
Yep.
third one is, I think, your cash flow strategy. What does that mean?
Yeah. So again, what happens is when we're going for funding now, a lot of these banks either want to see a relationship or some sort of revenue going in. So we break it down into a very simple process. What we want to do is, again, credit optimization. Then we want to basically have a properly structured business. Once we have that, we can start going to the banks. And in terms of generating revenue, this would really more apply for businesses or entrepreneurs that don't have a business that's cash flowing already. We essentially just have different strategies that can help them increase their credit limits, liquidate their credit cards into cash without getting the 30% cash advance fees, and at the same time generating some income through their business and also through their checking accounts, helping build what we call like a bank rating with the banks. So the bank rating is basically just the average daily balance that you have over a 90-day period with the bank. And typically, I guess good, better, best would be, 2K, 5K, and 10K in what we call an average daily balance in the accounts.
For 90 days. Okay, cool. So this is all good. It's kind of theoretical. Let's bring it down to a real estate example. I think you've got a case study of a real estate investor that you've worked with this kind of product. So maybe tell us a story. How did it work?
Yeah, so it's actually very popular, whether it be for like Airbnb people, people that are just fixing and flipping, or those who have longer term projects. But for example, I have a client who was he was flipping properties, and when they're flipping properties, they run out of capital fast, and also they have to every single time go back to that private lender, get a 10% interest loan. Three points on top of that goes to the actual hard money lender. So before they're even starting, they're losing thousands of dollars on a deal. We helped him secure $180,000 in 0% funding, and like immediately he was telling me he was averaging an extra $20,000 per deal through that 0% financing. And we're going
So what does that even mean? 0% financing? He got a credit card that had 0% interest for a little while, or what? How does that work?
Yeah. So this was, if I remember correctly, it was between like 3 or 4 business credit cards, one of them being a $80,000 Chase credit card, 0% interest for 12 months.
Cool. All right. So he had a number of these credit cards, 0% interest for 12 months, as long as I guess it didn't matter how long he had the money, he borrowed the money for it, as long as it was less than 12 months, it was 0%.
Yeah, and I guess while we're on that subject, and this is another thing that we see some other funding companies do that's just crazy, but typically, once we obtain these credit cards, now we can liquidate them into cash, right? And we have various methods so that you're not getting charged that cash advance fee and that high interest rate.
Because that'd be way more than the hard money loan if you're paying 30 points on. Yeah, yeah.
And then the 0% would effectively be canceled out on that card. So, but many real estate investors, especially, they don't realize like title companies, lenders, they'll accept credit cards for down payments, closing costs, if you're using like the right platform to do so. And we teach
And
a lot of
buying
our
stuff.
clients to
Yeah,
do that.
buying all your materials. And so basically paying for everything with a credit card instead of cutting a check for stuff.
Exactly. Even
Yeah.
traditional vendors that might not accept the credit card, there are platforms like Plastique, plastiq.com and Melio, for example, that will you'll pretty much eat that 3% credit card merchant fee, which now a lot of these merchant processors I'm noticing and business owners are passing that fee on to the consumers anyways.
Yeah.
But you'll end up paying that fee pretty much. But that a lot of real estate investors again are not aware that you can do that as well.
Yeah. Very, very interesting. Okay. So that's an example. Do you have any other real estate examples of people who've successfully gone through this process?
Yeah, the other ones that come to mind, those are fun because you can in the time span that we work with them, we can see things move a little bit quicker. But we had another investor in the short term rental space. He started off with like 3 Airbnbs, and I've worked with multiple of those. They always have cash flow issues, so it's hard. Like they're without the funding, it's like they're just surviving. So. He went to the traditional banks, got denied. They were asking for 2 years of business, financials, tax returns, all this stuff. And then private lenders, he had a couple of them pretty much wanting to invest, but wanting a 30% of the deal or equity. So with him, we set him up with 120,000 of 0% interest business credit cards. And within a year, he went from like 3 to 12 properties.
Wow.
And then just keeping 100% ownership too. Like he didn't have to give up any equity. All of that was on the business side. So even though he liquidated about 70% of that to put into Airbnb, none of that was showing on his personal credit report. We actually used some of that business funding to pay down some of his personal debt and put it on the business side. So that again, effectively shooting up his score.
Very, very cool. Patrick, this is very interesting. If people want to connect with you and find out more, where should they go?
Yeah, I've made it really easy for them. It's stackingsuccess.com. If they go there, they can get a super comprehensive report on how much funding they might pre-qualify for now, and also what are the steps they might need to do on their personal credit side to unlock more funding. And as an additional option for those that might want additional help or get on the phone with somebody on my team, they'll have an option to also schedule a funding strategy call.
What's the URL again?
It is stackingsuccess.com.
Awesome, Patrick. Well, thanks very much for kind of showing us how this all works and a different funding option that a lot of people probably haven't thought of.
Thank you so much, David.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.